Sellers are getting very frustrated with the way the market's behaving and some buyer behavior as well. We're going to get right into that. I'll give you some anecdotes as well for entertainment. But first, let's get some context out of the way because, again, a lot of data and a lot of people analyzing and commenting. And again, data without context is kind of useless in my opinion. So first, I want to talk about the spread between condos and detached homes, specifically for the city of Toronto, because this impacts two of the biggest trading groups. That would be the upsizers looking to get from from a condo into a detached, and downsizers going from detached into condos. The reason this is important, number one, right now we have downsizers stalling out. They don't want to sell because obviously the 2022 peak prices are gone. But what you have to understand is that the spread between a condo and a detached property is still a relatively high. Like we're talking here, $600,000-$700,000, whereas prior to 2020, that spread was maybe $400,000 to $500,000. So you're still, quote unquote, ahead than where it was in the past. Now, with a lot of downsizers, they're still thinking about this peak where the spread was honestly close to $1 million, where if they were downsizing, they would be pocketing about $1 million if they were going from median house to median condo. But obviously that was a one-time event that is probably not going to happen anytime soon. And maybe those are famous last words, but who knows? What I'm getting at here is this spread is relatively consistent. Now, you're going to see a lot more fluctuation in prices of detached homes because they transact on a lot more of a seasonal basis, whereas condos are pretty steady month over month. So depending on the month you're comparing this detached versus condo, it's going to vary drastically. Like, for example, you're seeing the October stats where detached dropped substantially. Condos are actually up a little bit. This is Toronto proper. So you're going to think to yourself, well, what's happening here? Is the spread getting narrower? You're still seeing the spread is where it is. It's been the same for the last 3 years. So this is an important piece of data that we have to look at in terms of how the market's behaving. Now, the second piece of information that you have to keep in mind is that in prior bubbles where we've had prices run up very quickly and then they fall off a cliff, generally in 416, it takes about 6 to 7 years for prices to stabilize or recover. Now, on the outskirts, let's say outside of the GTA or far GTA, you're talking 7 to 8 years for that recovery. Now, we're pretty much rounding up year 4 of these down years / flat years. So statistically speaking, we have 2 more years of quote unquote pain where we're going to have below average transactional volume, where it's going to be a lot more difficult to sell any sort of property. So a lot of you are asking yourselves, well, why does it matter? Well, the reason it matters is for the last 3 to 4 years, seasonality has been relevant, but not so relevant, especially because a lot of the stats in the GTA are driven or skewed by detached homes. As you're seeing, we've had no fall market, and ask anybody that's currently active right now, getting a deal done in this market it's very, very challenging. I've had people threaten to, I had actually somebody pull out of a deal yesterday, which is very rare when you go firm or you have an accepted offer, and then somebody it's like, hey, you know what? I'm not going to deliver the deposit. I'm going to walk away. Like things like that are not that common. You hear about them, but they're happening a lot more. And there's obviously a lot of reasons for that. What you're going to notice is we've had no fall market, and this has been the same situation in 24, 23, 22. And the reason I bring this up is a lot of people always ask, well, when should I list? Mostly from the seller side. And I don't have a silver bullet, but generally your fall and spring markets are your best times to list. In particular, as of late, in a down market, spring is typically the best. And sometimes that spring market can get pulled forward as early as January or February. And we'll get to that in a bit because inventory usually gets removed off the market and it creates this artificial vacuum. But as you can see right now, last month I said I was expecting prices to stay flat, but even in this October, prices have actually skewed down, median prices, which is surprising. And that is because mostly driven by the city of Toronto, which is not holding up. So it's not holding up, prices are going to go down. So we're definitely going to have a down year for 2025, and it's going to be a decent downswing. We're going to see where that ends up. But let's get into more of the nitty gritty now. In this video, this is going to be the most important or valuable chart, I think, for those of you watching this video, if you want to get educated on what's happening and where I think the trend is going to be next year. This includes the entire GTA, so York, Halton, Peel, Durham, Toronto. Condos, detached. Again, my favorite thing to illustrate a very simple point on the spread for upsizers and downsizers, and also to indicate how typically the spring markets, so this is the spring, this is called between February and May, how the spring markets have been the stronger performers for detached in particular. This applies to semis and townhomes as well. And how the drop in price post spring market is actually accelerating from 2023, 24, and now in 25, much steeper. Are we going to see the same thing in 2026? I mean, you don't have to be a genius to have a high probability to think all things staying the same, barring no worse news. Let's say things are just the way they are, which is not great. We're probably going to see the exact same year, detached and condos both going down. Now let's get into some actual nuance in terms of things on the ground floor. So for luxury or higher end properties, let's just use the number of 2 million, even though like actual proper ultra luxury is like 4 million plus, and those are in a different league and those things move at a different pace. The no man's land for property right now is 2 million plus. In some areas it might be lower depending on your area. So let's say you're in Markham, 2 million plus, in Toronto, 2.5 million plus. This is where things are really interesting because you're going to get very few showings. You might have interest, but again, buyers are very picky because you're not talking to the ultra high rate, high end clients. You're talking to people that make a lot of money. Obviously, they have buying power, but it's not the quote unquote elite, right? Where houses or residential homes are basically rounding errors. Like let's say somebody's buying a $6 million house. For them, that's probably not a big deal. And the reason these $2.5, $2 million plus $3 million homes are sitting is because you're still catering to the general population that's like the upper middle class, let's call it. With these properties, it's not so much the case where nobody wants them, but it's a matter of the right buyer being out there while the property is listed. And this is where I see a lot of people get discouraged because if you don't have staying power or you have to sell, moving a property like this will take a little bit of time. Now, on the other hand, if you get into the properties between $1 million and $1.5 million, if you're listing and you're not selling, it's almost always 100% a price issue. Whereas with the more expensive homes, it's not necessarily a price issue. It's just a matter of the right buyer being ready to buy at the time when you're listed. But if you're not selling sub 1.5, it is most likely 100% a pricing issue. And I see it all over the place. If you're off even by 50 grand from where the market feels this house should be, buyers are just going to skip it. They're going to go on to the next one because the active inventory is there and they have lots to choose from. Can you blame them? No. Earlier, I had mentioned that typically the spring market in a down market is the best time to sell, as we've seen based on historical median price. And the reason for that, there's many reasons. At least my theory is that we usually create this artificial vacuum of inventory towards January and February of every single year. And what happens is, as you'll see here, this is the days on market for condos, which is the purple line, and the blue line is for detached. So basically, how long does the listing sit on the market before it sells, terminates, or gets suspended? These numbers are actually a lot worse, but this is the best data I have to work with. The point here is, as you go towards the end of the year, the days on market go up and up and up. And then what happens towards January, a bunch of people will terminate a bunch of listings and you'll see this massive removal of inventory, and then inventory is low again. And then in February and March, you have the least amount of inventory typically. And that's when if you have your detached home ready and on the market ready to be sold, generally you're going to get some activity and possibly a slightly higher price than you would have if it was listed, let's say, in the summer. So case in point, in terms of new listings and new active listings coming on the market, as you'll see, the rate of decrease from September into October is actually higher. So more people are not listing, therefore new active listings are lower on a percentage basis than where they typically are based on a seasonal basis. So what that's telling me is that we're going to see a lot of inventory being taken off the market that hasn't sold, and it's likely going to come back next spring, or maybe people are just going to wait it out. The good news here is I've always said liquidity, liquidity, liquidity. So this is the transaction volume in terms of what is happening. So once again, we're closing the gap where if we seasonally sell 8,000 homes in the month of October in the GTA, we sold 6,100. So this gap is narrowing. The narrower this gap is, the more liquidity is, the more transactions that are happening, the more that it's making the market feel a little bit healthier despite prices still trending down. At least there's liquidity, at least deals are happening. So this is good news. I do expect this is going to continue. I'm even seeing some investors come back, especially in the condo market, where you can buy cash flow neutral condos pretty much all day long at this point, assuming it's a good building. I think that's not a bad buy right now. The ROI on that and the internal rate of return is actually pretty good, but we'll save that for another video. Liquidity is coming back. Again, I'm not super confident that's going to do anything in terms of prices, but at least with liquidity, people are going to be able to get out of their properties and move on. Saving the least important graph for last, because I know at this point only the veterans are actually watching this stuff, or at least the people that want to know what's up. And I'll give you a good story from this month. But Active inventory, again, we're still high. Does it even matter at this point? Yes, it does. But I mean, the bulk of this is condos. It's still made up by condos, most of it. On the detached side, freehold, you're above seasonal norm. But again, a bulk of this above normal active inventory is entirely due to condos. It is not going to change, at least going to 2026. So nothing to kind of see here. But I will share one story from this month, and again, this has been a prevailing issue for years. It's just now it's getting a lot worse, and it's just something worth highlighting, just for sellers and for buyers. Kind of like a little bit of a cautionary tale for what not to do if you don't want deals to blow up in your face. So, as of late, buyers are using inspection clauses, in particular, in bad faith. Meaning, if you do an inspection clause, generally you're doing it obviously to find out if there's any structural or any big issues with the home. But a lot of them are putting it in with the entire intent that they're going to go and try to chip away further 30, 40, 50, 60, $70,000 off the price that they originally had agreed upon. Now, if you have a valid reason to do so, something that you weren't aware of, fine, right? That's between you and the seller, and you're going to decide if you're going to meet in the middle, if you're going to work it out, if the seller is going to fix it, what have you. But a lot of buyers are actually going in, I'm going to agree to pay $1 million right now just to get this property locked up, but I'm actually not going to firm up on it unless I get it for $950, and I'm going to try to chip away at the seller after we've gone conditional, and then I'm going to try to chip away 30, 50 grand on the back end using the inspection, even though I don't have anything in the inspection enough to warrant that sort of a reduction. Don't do that. It's I don't have a word for it. I mean, I do have a word for it, but it's probably not going to sound very nice. I'm just not going to say it. But just don't do that. It's scummy. It's scummy, and it leaves a bad taste in everybody's mouth. And chances are you could have picked up a house you would have been happy with, and without having to do all this nonsense. If you don't want the house for $1 million and you want it for $950, you got to negotiate that up front and not use the inspection on the back end to just sour the deal, which is most likely going to blow up in everybody's face. Anyway, I'll leave you with that. Enjoy the rest of the day and have a good one.